for joining the call. You must have already seen the results, so I'm not wanting to kind of deal with individual numbers, but would like to kind of take you a little back to what we have been saying for the last 2 quarters after we started seeing things moving in the direction that we saw it was moving. I'm happy to state that the way we scripted the possibilities is the way it's panning out, and therefore you can see the results also in that direction. Now, what are the things that we see and we believe that they are the fundamental trend change? I would think that the rural market continues to respond to the positive farm cash flow, and the sentiments continue to hold positive. And this has been one of our past statements to say that if the monsoons turn out good, if the yields are good, and if the support price announced is average plus, then one would witness that the rural sentiments will turn positive. Consumption story will begin to happen. In some form, we are clearly seeing that happen. I must at the same time bring out your notice that while we are registering a growth in our disbursement, in our AUM, etc., but the underlying industry, whether it is the overall auto industry, whether it is the truck industry, except possibly the commercial vehicle industry, which is more aggressively growing, I think the other industry is still growing at 8%, 10% kind of a story. And they are more backed, at least the car industry is more backed by personal segment, urban launches, new model, etc., of which Mahindra Finance is not a direct beneficiary. So our strategy of remaining closely penetrated into the villages and very close to the customer through our branches and with our local presence, continuing to remain our strength, and that is helping us maintain a growth. And in this quarter, if we have had a disbursement growth of about 17%, it has come at the back of gaining some market share for some product, as well as kind of commencing our growth on other products which are reaching out to the rural market. So our strategy will continue to remain that we will continue to penetrate deeper. We have not added too many branches in the last 1 year, while we have had about 200 odd collection branches. As things change now, we do believe that some of these branches will get converted also into a business branch, and we do have an approach that in the next 3 months, 4 months, 6 months, we would add close to about 100 branches, which will commence to happen from February. So the branch penetration, going closer to customer, multi-product approach, working with every dealership of all the OEMs, using our existing customers through them to generate more customer in the local market will continue to remain the story of our growth. We have had extensive discussion with various OEMs in the changing scenario, and we are happy to state that they continue to believe that we are one of their most important strategic partner, and that has helped us get some volumes in the Renault type products, Nissan and all this product. And Maruti with their Nexa entering the rural market have, I think, opened close to about 250 dealerships, and in 1 month that they have operated from, we have had a number of about 500 odd vehicles in Nexas that we have done already. And therefore, if their growth story comes from this showroom, we do believe that will remain another growth story for us. Normally, the fourth quarter is one of the best quarters for our kind of business, especially in the rural market. And we have not seen any adverse signals to believe otherwise. So we think that the fourth quarter will turn out to be an exciting quarter from the market perspective. The OEMs are driving hard for higher volumes. They are continuing with their discounts since the inventory levels continue to remain high, and they do see that with programs launched, the volumes will definitely pick up in this market. And if that was to happen, we believe that we would be the beneficiary of the volumes that could happen. The pre-owned vehicle has seen a little subdued traction in the last couple of months after the GST introduction, because the rate for pre-owned vehicle remained very high until just a couple of days back, where there has been a clarification on the change of rates. We do think that this change of rates will make that business once again look up. While I may not want to say it will go back to its original position, because even now the brokers are not as participative in this business. It's a very organized player game now, and therefore the volumes may be not as high as in the past, but definitely would be higher than what we have seen. And we have a very clear focus on growing this business. either our customers selling vehicles to another buyer of the vehicle could be one program, or using the True Value or Mahindra First Choice Wheels outlets is the other program, as well as some of the organized brokers who convert themselves with registration to participate in this business. So I think pre-owned vehicle will remain one. Commercial vehicle turning out to be a new story. They have registered a very high growth rate from the market. While it is still bought by strategic customers, they are not necessarily our segment of customer. But from the semi-urban rural market, we do see mid-size operator, mid-size contractor adding volumes, and we do get some benefit of that. And therefore, in this quarter, the growth is driven by commercial vehicle growth that we have had. Amongst various segments of our commercial vehicle has registered a decent growth for us, and we do think that that will remain to be a good story to look at. On the tractor industry front, again, we have moved from beyond Mahindra and Swaraj tractor financing, and we are averaging upward of 1,000 plus tractor for non-Mahindra tractors. So that's another storyline for us to add to our growth. But even more importantly, we have become a significant player in pre-owned tractor financing, and where we are averaging upward of 1,500 to 2,000 plus tractor. Certain months we have had volumes going even beyond 3,000 tractors. It's a very, very large market, but one needs to be very close to the customer. We need to know the quality of the asset that is getting sold, as well as one needs to know who is selling it to whom, and that's the direct advantage, and that does not have any competition around, since we are one of the most significant player in as far as tractor financing is concerned. Net, I would think the disbursement excitement continues to remain. I think after about 2 years of over follow-up on collections and trying to maintain quality, the last 3 quarters have registered growth, and we do see trajectory going in the same direction. And that's our belief, and we think that we will continue to remain focused on growth as well. I would not want to say that the quality has completely improved and everything is back to kind of its original position. But clearly, we don't see any increase in the NPA for the last 3 quarters. In spite of the fact that we have moved to 90 days, I think our NPA gross has remained at what it would have been if it was a 120-day kind of a number, which means there is an improvement of around 1% gross NPA. And we do think that even in the next quarter, trends remaining the same, cash flow supporting the way it is, we do believe we can do further correction. We've had one kind of a commitment, if you may call, in the past that we were driving, that is to keep the gross NPA levels at around 10%, which was our, I think last year's March number was 9 plus on a 120-day basis. So we do believe we can drive towards that number, and if that was to happen on a large asset base, it would be a good reversal of provisions that could happen, which is a direct improvement to our profitability, leading to our returns improving substantially. I think the AUM crosses 50,000 crores is another significant landmark from our point of view. While the AUM growth, one may look at as a little subdued at 13%, but it's also a net growth at there are contracts which mature, and therefore the net being what it is. But clearly, AUM growth is the direction that we are willing to bet on, and we see that is happening. I think the new organization structure that was put in place about a year and a half back is yielding good results. There is clear focus on every activity, and when we see support from the market activity-wise, we seem to get a direct benefit of it. On the liability side, again, I think we are adequately supported by all the banks as well as any other instrument that we borrow from, whether it is the Provident Fund, Pension Fund, Insurance Company, Bond, all kind of mutual funds. Everyone is very participative, and we do see that availability of funds for a product like this has not been a challenge. With all your help and support, we have adequately capitalized, and as you see, and we are on record to say we would have raised capital only for growth, and I think that's what we are demonstrating, having raised this capital. So net I would put, and then few points on our subsidiaries. I think they are keeping pace with growth. I do appreciate that the rural housing has had a similar NPA issues in the past, but they also seem to be coming out of it. I think their problems are large only in one state, which is Maharashtra. And in the third quarter gone by, they did see correction, and in the fourth quarter, you would see further correction to quality of asset even for them. The insurance broking is, of course, is an fee-based business, and in the last quarter again, they also have had a 30% growth to their overall revenue, etc. On the P&L side, there was, I think, one transactional entry of a long-term benefit which was taken, and therefore the net profit looked lower than previous, but adjusted for that, even the profit had a 30% growth. I think all our businesses, I would imagine, are back to where it belongs to. We've gone through the most difficult times, and with everyone participating and supporting us, I think we seem to have come out of it. And the story of the business on which it was built fundamentally remains the same. Closer to customer, understanding customer cash flow, designing product and delivering at the doorsteps, and ensuring collection as the customer has money. And in case of failure of the customer to pay, and if intention, collateral management is the strength. Circumstances, partnering the customer is the strength. I think we would stay with that approach of partnership, and we believe that with support from all the OEMs that we work with, and with the reach that we have developed with a large team that has been focused activity-wise, will help us kind of bounce back from where we left. So we measure ourselves from 13, 14 as we close the book to we speak today, are we getting back to the growth story, rather than measure our growth on the basis of book that got closed in 16 or 17. I think that's the overall storyline. I would now open it up for Q&A where we can cover all the aspects of questions that you may have.
Yeah? Sure. Yeah. Sure. Thank you very much. We will now begin with the question and answer session. Participants who wish to ask questions may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. And we have the first question from the line of Varun Sabu from City Capital. Please go ahead.
Hi, sir. Congratulations on very strong numbers. Just want to understand on the disbursement front, there is a pickup which we are seeing. Is this faster than what you were expecting? And are we seeing a similar trend, or probably we are seeing disbursements to be even stronger from here?
So at the end of the day, we are only an enabler, right? So if OEMs are going to sell more vehicles, we don't see competition which is pressurizing us to do anything less. So I think, and our understanding is OEMs are going to run large programs in the fourth quarter, because the inventory levels other than Maruti are still at a very high zone, and we do see programs continuing, discounts continuing. And the commercial vehicle, as I just said in my initial talk, that the commercial vehicle is doing well. Pre-owned vehicle, which has remained subdued the last 3 months, will bounce back in this quarter with the GST rates getting adjusted. So I think we have reasons to believe that we would be very important and required by the industry. And if that turns out to be a good growth rate, the answer is yes.
Okay, sir. Thank you.
Thank you. The next question is from the line of Digant Haria from Antique Stock Broking. Please go ahead.
Yeah, hi, sir. Congratulations on a great set of numbers. Sir, I wanted to check that I've seen that last 2-3 quarters your commentary has consistently been positive, and now we have some proof of that rural cash flows are better because of 2 good monsoons. But sir, you have just stopped shy of saying that this is a strong trend which will continue for at least for like 2, 3, 4 quarters. So sir, what is it that is holding you from like saying that this is a trend, or maybe what should happen for this trend to accelerate? If you can just share your views on this.
If the English did not have a word if, then I would not have stayed shy of that comment. Unfortunately, English has the word if. What to do? Okay, my comment would be as follows. Are we seeing in every activity, every geography, every trend leading positive? My answer would be no. Let's take Karnataka, let's take Tamil Nadu, let's take Andhra as some example, right? I think things are not as good as one would like them to be when you compare them with maybe other states. So unfortunately, it does so happen that Rajasthan, Gujarat, Maharashtra, MP are going in for, or one has already gone for election, the others are going in. So the trends are very different from the ones which are not going in for election. Like UP has already finished the election. So are we going to see infrastructure story as aggressive as they were going into election? So when we look at many trends of this nature, I am not still very confident to say, oh, everything has got corrected. But definitely our tone has become positive because we don't see negative trends while we don't see extreme positive trends. And that's one of the reason I always say that, it would happen. Like between business and collection, I would be more confident today to tell you that our NPA growth would get arrested because we have already moved to 90 days in September and we need to ensure that they don't deteriorate any further. But at the end of the day, for business, I am dependent on someone to do more vehicle. And I do not want to be seen as someone who's trying to sell vehicle. We are very clearly someone who is helping somebody buy a vehicle, provided they have decided to buy a vehicle. So therefore, the if is more for a business and not for recovery. On recovery, I am very, very confident to tell you that at least the 3 quarters that we have seen, the NPS have not moved up, and in spite of moving to 90 days, we have not seen the same level of deterioration that we saw when it moved from 150 to 120 days. Right? So therefore, you must please read our comments from. For business, we are still cautious, but on recovery, we are little more confident that we were ever.
Right, sir. Okay, thanks for this. So second question is that, on the commercial vehicle side, we were one of the very early ones to pull out or to go slow, long back in 2013. So now if this cycle is turning around, do we have, are we ready to, capture the upsides which will come in this segment, say over next 12 months or so?
So the readiness comes from, even when we pulled out of the business, we did not dismantle the organization. We had head of commercial and construction equipment continuing. We had the whole team continuing with us. We engaged them into doing commercial vehicle, LCV, what you call JCB kind of backhoe loaders and pickup range of vehicles, and not go overboard on heavy commercial vehicle, which became a very strong banking product because the people who were adding capacities were all large fleet operator, logistic companies, and they were all asking kind of rates that was, even lower than our net interest margins currently. So it didn't make any sense for us to be in that business. And we forecasted that the industry will go through a bad cycle, not that we are great predictors of that, but luck would have it, it went through that. So therefore we moved out. As we now get back into that, we don't have to redo a big organization again for it. But I must tell you that even in this round, you will not see us going and financing 100 vehicles to somebody. We will finance 5 vehicles, 10 vehicles to someone who is planning to buy 25 vehicles, provided we see 15 vehicles are being funded by a financier who is acceptable to us. Like if Sundaram Finance is giving 15 commercial vehicles to someone, we don't mind doing 5 vehicles to that fellow if he's buying 20 vehicles, but I would not be the single financier of those 20-25 vehicles to those individual fellows. But commercial vehicle, we will remain, I don't know what by number, but we will be amongst the top 5, but we will be after the third. We will not be the first, second, third, fourth in that business for sure. Because there are stalwarts there and it's a very urbanish product, it's a large fleet operator product, and therefore our volumes will continue to be about 7, 8, 10% of our total book. It will not be 15, 20% of the book.
Right, sir. So thank you very much. Thank you.
Thank you. The next question is from the line of Abhishek Murarka from IIFL. Please go ahead.
Hello, sir. Good evening and congratulations for the quarter. It was a really good set of numbers. So I have 2 questions. One is, if I look at your pre-owned vehicles and notwithstanding the GST effect, if I look back 7, 8 quarters, it has been around the 4,000 crore AUM mark. And it's not really gone, up or down much. And especially in the last, as in 2Q to 3Q, it's actually come off by about 8% sequentially. So the question is, what is the strategy there in this period of 6-7 quarters? We've seen other competitors grow that book quite aggressively. So what is it that's probably holding you back from growing that book?
So I don't know who are you comparing us with, but I think pre-owned commercial vehicle must have shown that kind of a growth, and our pre-owned does not have commercial vehicle in that number. Ours is basically UVs and cars and those kind of products.
Okay. And tractors would also be
therefore by value itself they'll be very different.
Okay. And used tractors would be, pre-owned tractors would be captured.
A part of that story.
Okay. So from here, here onwards.
Abhishek, one minute. Dinesh wants to add something.
Since this is car and UVs, end-to-end tenor of this loan is also mostly 2 years.
Sure.
So it runs off also equally fast.
Sure. And so on this SME and others, now again there on a sequential basis there has been a sharp drop from almost 6,000 crores to 5,100 or 200 crores.
So that we, if you recall, in last call we had explained that there is a advance given to the dealers for the retail conversion, and pre-festival period there is a advance level goes up. So if you see in the September call, we had specifically said that there is a advance level which is higher to the dealers and which gets converted in the retail form once the billing happens to the retail customers. So effectively that translates that.
Okay. And so second thing is on asset quality, can you share some collection efficiency numbers, this quarter versus last quarter on an overall basis, what they were?
I think if I think right, in this 9 months, we have never gone below 90%. And it would have ranged between 91, 92 to about 95, 96%.
Okay. And that would compare with sub 90 or 88, 89%?
4-5% higher than what it was the previous year. I mean, because last year we shouldn't forget that the demonetization screwed up to a 76, 77% kind of collection efficiency.
Sure.
Okay, so if that was to be normalized, we would be 3% or so higher than previous year. But if demonetization taken together, we'll be about 5-6% higher than previous year.
Okay. Sure. Thanks so much. And best of luck for the next quarter.
Thank you.
Thank you. The next question is from the line of Manish Oswal from Nirmal Bang. Please go ahead.
Yes, sir. Most of the questions already answered. Only one question. In terms of our full year AUM growth and the gross NPA target, could you share those numbers?
So normally we will not want to put out a number that way. I can just add that if 9 months has seen a 13% AUM, fourth quarter is normally one of the best quarters for us. So one can imagine it will not be below 13%.
Okay. And secondly, sir, you said certain territories still there is some problem. And we in FY 2018 will see certain assembly election. So do you believe that will have some impact on the collections?
So when we said certain states, we didn't mention that they are states which are giving us problem. I think that was an answer to a question why certain states still don't show growth, and therefore why are we little cautious about when we speak on growth. So I think it's important to understand that those states don't necessarily add to bad quality, or they are not the ones dragging us down, but they are the ones who are not giving us confidence to speak loud to say, growth across the country story. So that's one. As far as the assembly, the state elections are concerned, if the state spends a lot of money on the infrastructure, it's a great positive. And around the election time of maybe 3 days, 1 week kind of story, we have to be extremely cautious in repossessions and recovery of cash from the market. There is not big negative out of assembly election.
Okay, sir. Thank you very much. All the best.
Thank you. The next question is from the line of Viral Shah from Credit Suisse. Please go ahead.
Hi, good afternoon. Thank you. This is Sunil Tirumalai from Credit Suisse. Sir, I have a couple of questions. On the tractor business, we've actually seen quite a few of your competitors beginning to show good disbursement figures, almost matching up to your numbers in a few quarters. We always thought that this is a segment where penetration of finance is fairly high. It is a dealer-driven business, and rural, etc., where your strength and franchise should be fairly strong. But looking at the peers' numbers, there is a doubt that are the entry barriers really so high, or is it something that others can also easily replicate? So your thoughts on that, please.
Okay. So while value may be similar or lower, first I'm not sure whom are you talking, but their value possibly will not be as high as us. Even if they are, they will not be for Mahindra and Swaraj tractors, because we don't do competing tractor. They have an edge over us in the competing brands like Massey Ferguson, Escorts, or in Eicher, Sonalika. these kind of brands. So it's important to possibly look at the number by brand and look at the number by state. And if what I think is right, and if those are the brands that we are talking of, then this must be companies which are very strong in Rajasthan. These are the companies which are very strong in Punjab, in UP, in Gujarat, whereas they will not be possibly as strong in Maharashtra, AP, or what you call Tamil Nadu, etc., where we have a decent market share. Now, what you need to look for us is, while we have a 30-35% market share for Mahindra tractors and Swaraj brand, we have also started penetrating into the other brands. So the way to look at it is, what was zero for us has now become about 1,000 plus tractor or 1,000, 1,500 tractor monthly, rather than looking at that others are doing about 2,000, 3,000 tractors, which earlier they were not doing. And just to put the number right, I think we are doing about 9,000, 10,000 tractors plus another 2,000, 3,000 pre-owned tractor together. We must be doing not less than 10,000, 12,000 tractor a month. I'm not sure that others' number match up to that. But I'm very comfortable that for Swaraj and Mahindra, we don't see too many players around. With we having 30-35%, all others share the balance 62%, and we are now penetrating into other tractors for our growth. All this said, I think there are many more players in tractor financing than they were before, and they have come not to take away from us, but they are taking away from the nationalized banks who are going pretty slow. So if you look at the 100 tractors sold and you look at 1 to 2 year back, you would find all the nationalized bank and you will find Mahindra Finance and maybe 1 or 2 companies. Now you see all these players have come in and you will see the numbers for nationalized banks have come down substantially. So it's their number which is being taken. So one should wait and see when nationalized bank come back into tractor in a big way, how that industry is going to behave and who's going to gain or lose.
Thank you. Just to clarify, I mean, if there are 100 tractors sold in the country, how many would be on finance, and of the financed, what would be your share?
101. Tractor industry is that way, right? Some tractors get double financed also. So therefore it could be 101. But on a real term, it will not be less than 80-85% of that.
And your share of financing?
So we do, as I said, the Mahindra tractors, we do about 32 odd percent. 15-16% of the industry will be with us. Because Mahindra is about 45% of the industry, right? So that gives us 12%, 12 to 13%, and another 2% we get from the other products.
Right. My second question is on your spreads movement, which has been quite impressive this quarter. Just wanted to get a sense on yields, funding costs. What are the trends you're seeing? What's the outlook?
I think the spread is an outcome of also a benefit of income reversal, whereas our yields have always remained in the range of 17. Borrowing cost has come down, so maybe the average borrowing cost could be 7.758 or so, or maybe even 8.25. So to that extent, the spread might be there. But if our NPA continues to show trends of decrease or stability, then you will continue to see the NIMs remaining there, because the income reversals then would not be high.
Right. And the reason for the OPEX, being quite high, that was a bit of a surprise. Thank you.
Is it high? Okay. It's not come down maybe.
Okay, on a quarter-to-quarter basis, it was grew faster than usual trend.
Okay. Thank you.
So I just wanted to understand what.
Oh, you wanted to understand? I thought it's okay. You are going out. So,
it's up about 16% quarter to quarter, which is any one-offs over there, or is that a sustainable base?
I don't think there is any major one-off in that. Are you talking of including the salaries and all that, employee overheads included? Then one of the reason is normally our increments are announced pre-September, and this year we are delayed it, waiting for a better performance, and therefore the increments were done only in this quarter, and that is a one-off entry, if you may think, and that's caused a reasonable impact, and that would not be there in the next quarter for a fact.
Got it. Thank you, sir. Thank you very much for your answers. Thank you.
Okay.
Thank you. The next question is from the line of Hitesh Gulati from Haitong Securities. Please go ahead.
Yes, thank you for giving me an opportunity. So my question is on your CV and CE book. So I wanted to understand what proportion of this would actually be construction equipments, and in construction equipments, what are the exact sort of equipment that we are financing, and also on the CV side, what are Are these the large trucks, or what is the exact nature of CVs that we are doing?
So construction equipments, we are mainly only or rather only into backhoe loaders, which is either JCB machine or Mahindra, what you call that as Mahindra Earthmaster. Okay, and that's the equipment, and therefore they are not large contractors. They are mid-sized contractors who are sometimes subcontractor to the main contractors kind of consumer forum. So far as the overall book of commercial vehicle construction equipment together is about 7-8%, and I would imagine construction equipment would be 1%, 1.5% kind of a thing, not beyond 2% for a fact. As far as the mix of the commercial vehicle is concerned, we do have heavy commercial vehicle, mid commercial vehicle, some tippers into that, as well as LCVs and pickup kind of a vehicle, non-Mahindra, which are also a part of that story. Therefore, we never call ourselves a significant commercial vehicle player. So we are in the industry, but we are a mix of all of this.
So what proportion will be MHCV, LCV and tippers? Do you have those numbers?
That's too much of an analysis, but I would still think that if you are doing 500 crores a month, this is just my guesstimate, please don't hold me to a reconciliation on this, but I think about 100-125 crores would be commercial vehicle, rest will be mix of everything like construction equipment, pre-owned vehicle, LCV, pickup, all kinds of things. Maybe 25 crore, 50 crore here or there. Kitna heavy commercial vehicle?
7% will be a combination of
everything.
LCV.
No, so he wants to know.
50% is the smaller segment, which is LCV, Tata Ace and all those kind of segment. And 7% what Mr. Iyer expressed is HCV and CE put together.
So just to kind of, since you are asking, why will this breakup be of interest to you? Just, more as a clarification.
No, just because in the past we had highlighted that we had pulled out of the CV segment. So trying to understand what are the segments we are looking to get into.
You can continue to believe that we are not supporting the large fleet operator, logistic company, those kind of segment, which is not our edge at all.
Okay. Thank you, sir. That's it from my side.
Thank you. The next question is from the line of Kunal Shah from Edelweiss Securities. Please go ahead.
Yeah, congratulations. Great set of numbers. So I joined the call later, so don't know if you have addressed it earlier. But firstly, in terms of the write-off number, what would have been in this particular quarter?
1 minute.
Right. Continue with the other question.
One more question is there?
Yeah, and the other one is if we look in terms of the trend between the 90 and 120, so on a quarter-on-quarter movement, there is not much of a change, be it in terms of the number of contracts under NPL in 120-day category, but in 90 there is substantial improvement. So is it to do also with the change which has happened at the ground level in terms of collection efforts getting into this 90-day norm? Is it a reflection of that? Because maybe otherwise maybe movement should have been at least...
No. Let's first of all be clear, because somebody says from tomorrow NPA 60, customer is not going to pay.
Yeah, that's what.
He must have the money to pay.
We have been saying all through that.
And I'm continuing to say that. Now let me explain to you 90 versus 120.
Yeah.
And this again I have said any number of times in the past. Our customers at any point of time has an ability to pay only one installment. Right? So when somebody is on 90-day and he pays one installment, he doesn't become an NPA. And when somebody is on a 120, he is also paid one installment, but he continues to remain in NPA.
Okay.
Okay, that's the way you have to look at. And therefore, 90 by nature will not become NPA going forward if we control it by collecting one EMI. And the 120 fellow will come out of NPA over a period of time when he starts paying little more than one EMI, or after he starts paying when he finishes his contract and he continues to pay the balance installment.
Okay. But largely, despite maybe the stronger cash flows out there in the rural, still I think so in terms of a customer payment also, it's been with one EMI. Maybe it's not coming more than one EMI. That's the another indication which is there.
So 57% of our customers who moved into NPA have registered movement. Right, which means they continue to service their installment. They may even pay a little more, but not adequately enough to come out of NPA.
Okay, and that's largely the similar kind of a number which has been there over last 2 quarters as well.
Oh yes, oh yes. But one should see that the last 2 quarters are not necessarily the best quarter for rural. Third is one of the good quarter. Fourth will be even a much better quarter historically, if you see. And therefore, if every condition of the rural market that keeps them happy like in the past happens, you may see some improvement to this installment. Some may even pay 1.5, some may even pay 2 installment.
Okay.
And to your first question, we had a 62 crore write-off in the quarter.
62 crores. Okay. And last quarter it was quite high.
Because every September and March we take a technical write-off of as per the rule.
Okay. Okay. And lastly, just you highlighted in terms of tractors, maybe moving out of actually getting into the other manufacturers as well. So as a proportion of the overall AUM, do we see the tractors moving up?
So we were always in the range of 15, 17, 18% type. Will it become 20? Possibly yes. Will it remain at 18? That's all can be the moment, because we will never get to 30% market share in non-Mahindra.
Okay. So any which way, as a proportion of overall AUM also, it will not be much.
Because others are also growing. No, yes, 18 will look like 24 if others stop growing.
Okay. Yeah, that's true. Yeah. Okay. Cool. Thank you.
Thank you. The next question is from the line of Varun Balachandran from Catamaran. Please go ahead.
Hi, good evening, sir. Thank you for taking my question. So just one, I think you referred to the various different regions in the country recovering in different ways in terms of the rural demand. So sir, if you could just talk a bit about which regions actually have shown improvement, and what have been the underlying factors for the improvement beyond, let's say, monsoon and infrastructure? Are there any other factors, from a structural standpoint, that point to a strong recovery in, let's say, in the next 2 or 3 years? And which regions do you see improving in that sense?
Beyond farm and beyond infra in rural, I am not able to see anything else, because we don't find another financier coming and saying, I buy out somebody's loan, so you please go and repay them. Whatever is an urban practice of top up, purchase back of loan from somebody, that we are not seeing in rural.
Right.
It's pure, and nor are we seeing, I think, the third. Yes, in the past we have seen this, people selling land if they get some good price and discharge liability. I think that's the trend which we are yet not seeing. So currently it is a very, very retail cash flow coming from farm or coming from infra only. It is not out of either asset sale or out of alternate borrowing. It is not that.
Okay, and then if you could just mention which regions are actually doing well. You mentioned Tamil Nadu, Karnataka are lagging. Which ones are actually doing well beyond the ones where you have high market shares?
So from a business point of view, I would think so. UP has done well, Bihar has done well, Rajasthan has done average plus, Maharashtra is kind of borderline. It's not very good but not bad either. MP also has been average plus, Gujarat has been average plus. East is anybody's guess. East is doing very well, but by size they are not as big as North or anyone, so it won't reflect that, but they are doing well. As far as Andhra, Karnataka and Tamil Nadu is concerned, I think they are going a little slow for 2 reasons. One, I think these are very, very aggregator car market, in the sense Ola, Uber, Zoom, all of them are operating in this market, and they seem to be buying less cars than before, and therefore the car industry is a little subdued out here, and that's impacting their volume. These are also very strong pre-owned market, and the GST impact of pre-owned vehicle has impacted this market. But if you were to measure them by tractor, I think tractor-wise this will do well in January, right, which is their harvest time. So therefore you would see Andhra, Tamil Nadu, Karnataka possibly doing okay in January and February months.
Okay, this is very helpful, sir. Thank you so much.
Thank you. The next question is from the line of Alok Shah from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. Sir, I had a question for you. I'm just trying to understand the extent of discounts going on in the market. This is also to kind of try and link that to the AUM growth for us. So your comment is there on the discounting part.
So I will not put out product-wise discount, because I don't want to speak for Maruti or for Mahindra or anybody else. One thing I know that every product is available at a discount and the range could be 5%, 7%, whatever. Commercial vehicle could be higher, lower. But when we speak of our growth, one is we look at volume growth and then take an disbursement net of discount to arrive at an AUM, and which is why I keep saying that for the same volume, the disbursement remain a little subdued. And once the inventory levels get corrected, then you will find that for that volume, even the disbursement starts looking higher and better.
So maybe let me put it this way. How's the discounting between Q2 and Q3?
They are at the same level, except that Q2 had only one festival of Dashara in the month of September, and that program continued into Diwali. And then one saw that November, December excitement not so high, and they continued with the same program up to December, imagining year-end volumes will be corrected. To their not so good news, I think the volumes correction did not happen so much because they had built enough, and therefore the inventory levels went up. So we believe January is continuing with the same story.
Sure. I don't know if this is the right way of looking at it, but when I look at new contracts on a cumulative basis, this year, December and same time last year, it's an 8% growth. And we're still at 13% AUM growth. When I look at September quarter, it was a 7% growth in terms of new contracts on a cumulative basis. And we were clocking 14%. So I'm just trying to understand where would we end in terms of AUM growth? Maybe not 18?
So I think the number versus value growth is a product mix game. So while we have grown at 7% or so, it also has been contributed by CVC volumes coming in, which was not there the previous year for us as much. Second is our personal segment in Mahindra, even though the Mahindra market share has remained the same, what has gone for us is the three-wheeler volumes of Mahindras have gone down, and we have been able to get some market share from products like Scorpio, XUV, Bolero, which are high products. So in a way, even though the volumes are 7%, if you were to look at by value, it's double the value of the same product of the previous year. And therefore, you see this mismatch that is visible. In terms of AUM growth, where will we end up? I think only one thing I can tell you is our market share for Mahindra will remain at 32-33% for auto. Tractors will remain at the same level of 30-32%. Maruti will be around 7-8%. Hyundai will be about 5-6% or 7%. I think Nissan, Renault, etc. will be that 6% kind of a thing. So market share wise, we would remain same. If they sell more vehicle, our AUM growth will be better. We don't see price increase by them, nor do we see discount vanishing. And we promise you that our LTV will not be changed to gain growth.
Sure. So going back to something like even 18-20% will entirely be a function of how the industry volumes shape up. And
yes, absolutely yes. Unless industry volume picks up, unless discounts vanish, unless price increase comes back, growing to 25-30% will not happen. 15% the way it is. Another 5% once the discount vanish, 5% if the volumes pick up, 5% if the price increase happens.
Yeah, that's really helpful. Maybe just one more question on the point of tractors. You did give a breakdown of monthly volumes that you do for Mahindra and Swaraj and other players. When I look at our tractor AUM growth, we are somewhere closer to 13-14%.
Yeah.
The industry is clocking 16% odd. So anything more specific to read into it, or we should be comfortable?
So from the industry, if you kind of take Mahindra, Swaraj, and look at our growth, it will be in line with that kind of a thing, with 30% market share that we have, because we are still only 1,000 tractor or 1,500 of the others, who are 55% of the market.
Sure.
So if we start doing about 3,000-4,000 for them, then you will start seeing 16-17% kind of a number for us also.
Right. And any thoughts of doing that, maybe not immediately in quarters to come through?
Since you use the word immediately, my answer is yes. If you did not use the word immediately, my answer would have been no.
Okay. Yeah, that's it from mine. Thank you so much and wishing you all the best.
Thanks.
Thank you. The next question is from the line of Gautam Jain from TCJ Financial. Please go ahead.
Hello, sir. So your credit cost is declining in this year quite significantly compared to last 3 years. So can you guide us what would be the credit cost for next year, FY19?
Ravi, I don't want to put a number, and I can tell you that the trends are positive. our asset is growing, recoveries are improving, and customers are circumstantially better than they were 6 months back.
Okay, sir. Would you be able to give a range? Say we want to keep between 2 to 2.5 or like that?
Difficult for me to put a number. We have never guided it that way. But I think take our words for things will only keep seeing improvement from here.
Okay. That would be good enough. Thank you, sir.
Thank you. Thank you. The next question is from the line of Viral Shah from Credit Suisse. Please go ahead.
Hi, Sunil Tirumala again. Follow-up question. Sir, on the rural housing business, you did allude to the high NPA levels. While the growth is good, the NPA number is definitely worrying. For a business where nobody else really sees these kind of NPA numbers. And I believe you're also, at the moment expanding into larger ticket or, full home financing versus just home improvement financing earlier. So, just wanted to get some comfort on those NPA numbers at the time of this transition in the business. Thank you.
So, I think rural housing, if you don't read this as a housing business, this NPA will not be alarming. Because no sooner you call it a housing business and compare with someone like HDFC and all, then you will think what's happening here. So this is a very small ticket, 1 lakh kind of a loan, and the cash flows are not fixed cash flow of these customers. It's a farm cash flow or a rural cash flow, and therefore the behavior of the cash flow is directly impacting the NPA of this business. But I must tell you that NPA of this business is not equal to bad debts of this business. You will eventually find on a portfolio basis that they lose no money. And that's been the experience also so far. And once the money comes in the hands of the consumers, you will also find pre-closure is much higher than any other housing company in a business like this. The second way to look at it is that in spite of such an NPA number and provisioning, the return is 21, 22, 24% on return on equity, which means this risk is factored in pricing in some form. So we are not doing business at 8, 9, 10% IRR and then struggling with this kind of an NPA. So when we got into the business in rural market, we had a fair idea of the NPA will be very, very high and it will come off in the good times, and therefore we price the customer accordingly. But I am not taking an excuse to say the price is high, so let the NPA be high. We are only saying that the returns will be much, much higher when the money comes back. So these are temporary, momentary period through which this NPA kind of keeps going. And even in this year, if you look at their number in the first half versus third quarter independently, they have registered the same kind of a correction that you see in Mahindra Finance. And more so, they only have one state in which they have this larger problem where the book is large also, is Maharashtra. Because of demonetization, the cooperative banks were not participating, and therefore the consumers were not getting the seed and fertilizer loan, and the consumers ended up using the installment money for that purpose. Now that problem has been sorted out, you will see correction happening. But I still want to tell you that the NPA of this business will never be similar to that of a housing finance NPA, etc. They will remain elevated number, but they will also have the ability of full correction, and money not being lost is something that we can assure you.
So in this business, have you had experience of actually repossessing an asset in the past?
So we have one or two, but that's not required. Once we get an order, we go there, that fellow settles.
Okay, understood. Thank you.
Thank you very much. We take that as the last question. I would now like to hand the conference back to Mr. Karan Singh for closing comments.
On behalf of JM Financial, I would like to thank Mr. Ramesh Iyer and the senior management team of Mahindra and Mahindra Financial Services and all the participants for joining us on the call today. Thank you and goodbye.
Goodbye, Karan.
Thank you very much.